Well, hello and welcome. This is a market update for September 1st. I like to show you the market and what it's doing at the moment. Now, I like to know that I'm not a financial advisor. I just like to help you with my knowledge to you and to see if we can profit from the market in the future. But don't take my suggestion, just have a financial advisor helping you to make money. At this point, I'd like to show you the S&P 500. They are the 500 biggest company in America at the moment, and this S&P 500 is a good visual of the market, even the overall market, because the S&P 500 is 500 companies in the market. If these companies are going down, they slightly bring down the whole market all the time, But if these companies are going up, a lot of companies are profiting from that, and they have a good feeling and good vibe in the market at the moment that the market is okay. Now, this is the market, and is a chart of the market of the S&P 500. Right here, if you look, this one was March 2020, okay? This one when we had the pandemic and the market crash, okay? After that, we recovered pretty good. So at the moment, the market is a healthy market. Because if you look, the market went in a uptrend, in a good uptrend for a while. So at the moment right here, we are in September, and the market is doing great. If you look at the market, is bouncing on a line. This one is a daily chart of the market that we are in September. And if you look, the market is going in an explosive way, and right here is going down, and in the correction is touching the 50 moving average. Now everybody's like freaking out. Oh, the market is crashing. Even the news, in the news you hear in the news, you hear that the market is crashing, that it's going to have a big correction, that everything. Please try to stay away from the news. News, they're just an entertainment from everybody else to make you worry about it, okay? So what really tells you the truth is the chart in the market. The market tells you what is buying, what is selling. The market tells you if there is a correction or the market goes up in a higher way. So when the market is an uptrend like now, we have higher high and higher lows. So right now we are in a good condition right now, because the market goes up and comes down to the 50 moving average, and then it goes up again right here, and it goes down again. Now it's been the market very consistent on what it's doing. So it's going up and right here, and it's coming down again. Now it's coming up again right now, and it's going down, but this in a healthy way, because it's like the market is breathing in and is breathing out, okay? It's breathing in and then it goes up again. So the market at the moment is a healthy market. But see, if you look at the lines, we have the 20, the 40, the 50, the 100, and the 200 down here. But right now, at the moment, if the market continues what it's doing right now, at this point it should come down a little bit. But you never know what is going to happen. You never know what tomorrow is going to bring. I mean, don't sell it yet, because you never know, because from here, the market, instead to come down, it can go higher. You never know. So is a market, you cannot control where the market is gonna go. You can slightly understand where the market is gonna go. If there is a high percentage of the market is gonna tell you that the market will come down now, and it's gonna retract again to the 50 moving average, is gonna bounce again. Now what if instead to go to the 50, it's gonna keep going down? Because there is a lot of problem in the market. So, and the market is actually is overinflated. So if it keeps going down, what are you going to see if the market is going to go down? You're going to see the 20 moving average is going to cross the 40 moving average, and the 40 moving average is gonna cross the 50 moving average. So it's gonna come something like that, okay? So if those lines are crossing the other lines going down, that means that we're gonna have a beginning of a downtrend. But if this one is the 200 moving average right here, it's gonna keep going higher and higher without bending slightly, we're gonna be okay. So the market is gonna be healthy, okay? It's not gonna go anywhere. So at this point, the market is bullish, is slightly overextended from the lines, from the 20 moving average, because the moving average really what they're kind of like a magnet to the candles. So if the candles are overextended from the moving average, the candles has to go back to the moving average to bounce again. So if everything is okay, if that is going to happen, a chance for you to buy the market is right here, okay? Is right here. Remember, the S&P 500, they're the 500 companies biggest in America, okay? So the S&P 500 really keeps going higher and higher and higher and higher. You know, due to the companies that are inside these 500 companies, they keep producing good cash flow, and they're producing good money in the company. So in the future, this company is going to have a lot more value. You know, they're going to value a lot more than they're valuing now, and their share going to be cost a lot more money. So this S&P 500 is going to keep going higher. So if you look really at this S&P 500, you know, in a long term, it could be a great investment, you know, because it's always going higher and higher, you know. So it's very important for you to understand that if you look the market in a long way, if you look right here from 2016 and we are 2021, the market is really more expensive, you know. Because down here in 2016, the market was around $190, and right now we are at $451. So the market is going to keep growing, and that is S&P 500. That's what I'm talking about, okay? So buying the market is always a good thing. Now, if you are interested in options, you should buy a leap option in 3 or 4 years from now. Usually 3 years is pretty good, and a leap option will not cost you a lot of money like the market, but it's gonna grow a lot faster than the market in more profit, okay? But you really need to have a lot of knowledge before you buy any option, okay? Now remember, I'm not a financial advisor. Right here, I just give you a little more knowledge or the situation of the market where we are at the moment. Another things that I like to show you is right here is the seasonality of the market. You can find it in stockchart.com. You can find the seasonality of the market. If you see the seasonality of the market, you can see that the market S&P 500 from 2017 to 2021, so it's the last 5 years, you can see that the market really is always up. From the day or from the month that is opening up, like on January, 60% of the time, the market is higher from the day that is opening. February is the same thing. The market, 60% of the time, is higher of the beginning of February. Same thing in March. In March, the market closed higher at the end of the month 60% of the time. So the market is really, the market is the SPY, S&P 500, and is very reliable. But, you know, you always have to play safe, okay? Safe because it's your money, okay? Now the S&P 500, if you look in April right here, the market 100% of the time the market in April opens and they close higher 100% of the time. In May the market, slightly lower than April, but in May 80% of the time the market will close higher than the beginning of the month. June is the same thing, very very positive market. July is the same thing. August is slightly lower, September lower, and we go in October. Then we're gonna go right now. We might have in this coming month a slightly correction, but correction, they're not a bad thing. Correction are healthy in the market. Correction because maybe the Federal Reserve is gonna raise the percentage, the interest, and they might have be obligated to raise this percentage, because if not we are going to lose too much money on the value of the dollar, so they will have to balance. So that's what they do, they kind of try to balance. So in October there is a possibility of 50% of the time the market usually close slightly lower than the beginning of the month. Now if you go November, 100% every month on November, usually for the last 5 years, the market really start low and open higher. Not really by a lot, because if you're talking about S&P 500, sometimes you're talking about 5%. If you look here, it's 4.9. If you go to December, sometime in December we have the Christmas, and we have this one is the Santa Rally, and this one will keep the market slightly higher 75% of the time. So this is at the moment will be the S&P 500. That will give you an idea. Now this one you can find on stockchart.com. You can find all this information, and it's a great thing to know, because you can invest in March, and for sure you have a good percentage in April to be profitable, to have like a 5% profitable in the market, in the S&P 500, and it's pretty safe. So really in the market you really have to open your eyes and see what's going on, because the market is really a game of percentages. Okay, so it's really important to understand that the market, some months is going to be profitable, a good percentage, the other month is going to slightly slow down. You cannot always run forever with the market. Okay, so the market needs to be healthy to keep going higher and higher, so it needs to breathe in and breathe out. So it's very important for the market to have those kind of like not really crashes, but a 3 to 7 to 5% correction is possible in the market. So but that's normal. This is not the end of the world, because it needs to come down, breathe, and go up again. So this one is more or less the seasonality of the market that you can see on the stockchart.com. Now another thing I'd like to show you, if we go right here, this is the comparison with the Nasdaq and the S&P 500. This one you can find also on stockcharts.com. There is a lot of information that you can really find on stockchart.com. And right here, you can see really what is the buy point of the market. And more or less, the technology that this Nasdaq and is really technology they run fast. They run faster than the other company that's more reliable, that they are part of the S&P 500. Now, technology in the Nasdaq, they're really more aggressive, but they will do great in the future. But you really have to stand the volatility of those stocks going higher and then comes slightly down, because they have to come down for a correction before they go even higher. So even a lot of company on the Nasdaq, they are great companies, but they are a little more speculative. So you really need to have to understand at the point that that company is overvalued or is oversold and is undervalued. So you should buy those companies that at the moment they're really undervalued and they have a great cash flow and they're bringing great income to the company. They're really bringing lots of money, you know. Or some of those companies, they really have a buyback share program that they buy their own shares lightly, little by little. So if you have a lot less shares, at one point your share will value more money because there is a little more less float of shares in the market from that specific stock. So this one, if you look more or less, the S&P 500 and the Nasdaq, they're running more or less the same. Sometimes they're switching. Sometimes the Nasdaq is running higher. At the moment, the Nasdaq is higher, and sometimes the S&P 500 is higher. So sometimes they switch each other. Sometimes there is a switch on, stocks. Sometimes there is because the stock market really goes in waves. Sometimes one sector goes up, the other sector goes down. Sometimes the S&P 500 goes up, the Nasdaq goes down. So there is always a little switching left and right. That you need to understand. Now there is also a little volatility. When there is a volatility, you can buy, right? You can buy down here. You can buy right here. You can buy the S&P 500. Right here, you can buy the S&P 500. Right here, you can buy the S&P 500 to have a better return. Okay, so you can have a better return if you buy the market when it's down. Okay, should not buy when it's overextended and higher. Right here, that's where you should buy the S&P 500. Sometimes they say, oh, this Nasdaq is crashing. All the technology, they are overvalued. Yes, they are overvalued, and they have to go back to the intrinsic value of the companies, or they have to go back to the moving average. So they will have to go to the moving average, and from the moving average they will bounce. Okay, right here, it's not the end of the world. It's normal because Nasdaq right here is bouncing higher in few points. Okay, right here, that's when you have to buy the market. Now if you look, there is an uptrend right here. There is an uptrend. Uptrend makes a higher highs and higher lows in the market. So this one is a little update on the September 1st, 2021. And I give you an idea of what's going on with the market at the moment. The market slightly look bullish, but is slightly overextended at the moment. So there is a possibility that in September, October, slightly the market is gonna slow down. But you never know. Sometimes you say it's gonna slow down, instead it's gonna go higher. So you never know. You just have to keep an eye on what the market is doing with the moving average, and every day what the market is doing. At this point, I'd like to thank you very much for watching my video. I hope you enjoy. Click that like button, subscribe to my channel anytime, and thank you for watching.